Welcome back to the Real Estate Rat Pack Radio Show with Chris, Joe, and Rob. The crew is taking your calls, so dial in at 1-800-808-5548.
And we are back. Man, it's great to have a warning, let you know that you're actually back on air.
Yeah, we're certainly on a hot issue today, and we're just
yes.
I think we ought to actually put it on the air, put the in between the show or in between the break show, because we're talking about same house, 3 different appraisals on that. So let's kind of address what that's about. And so I'm going to turn to our appraiser, Jeff, and go, how does that happen?
Well, I think it happens in a lot of different ways, and of course it is the opinion of value, whoever the appraiser is, and so it may be a matter, one of the things we talked about earlier before the show was just the geographic competency of the appraiser, and whether they're coming in from a different area and they've never handled any assignments in that area, and they may not be familiar with the nuances and with the differences. For instance, property inside the loop, the land tends to be a major component in the appraisal, but yet people are more concerned about having a house that is the same size, the same this and that, but they may have a lot size that's twice as big as another one, and at $100 a square foot, that may be more relevant than the difference in other factors.
Yeah, and again, it is a very subjective thing, is that people see it differently. But when somebody comes in from outside the area, and there's a high standard for appraisers that they should be competent in the area in which they work. When they bring someone in from outside an area, is that a reason to protest the appraisal? Or
it might be. If they're not geographically competent, then that is a violation of their uniform standards. And so, but the matter is a matter of how to document that and so forth. Yeah,
because I know the appraisal management companies have gotten a lot better about getting the right appraisers in the areas, and they'll still do it on a rotation. And of course, we know that through Dodd-Frank is why we have this situation, is that they're trying to keep an arm's length between the lender and the appraiser. But when it first started, we had people coming in all the way from San Antonio to appraise in West University, and I remember, and you probably
and I think one of the problems is the appraisers that may be familiar with West University Place. They tend to spend more time. They tend to expect to be paid more, and they just do a different job than the guy coming in. And one of the things that's really been driven by the appraisal management companies is fast and cheap. And anytime you have fast and cheap, the appraisal may be fast and cheap, but it's really very expensive for the home seller, the realtors, the buyers, and everybody else involved. And so I know some lenders now that have to use appraisal management companies, they'll actually tell them, we will pay a better fee in order to have a better appraiser. Yeah. Now, a lot of the work we do is not through appraisal management companies. It's through the banks that have their own appraisal services group that are walled off from the other side of the bank. They may be doing portfolio lending and so forth. And they have a very good eye on the people that are familiar with the different areas that do the proper jobs, and that's who they're using. But that's not going to happen if you are forced into an appraisal management situation. And one of the worst cases that I know of is with the FHA, that once you get an appraisal, that's the one that's going to be used for 6 months.
Exactly.
And it has a horrible effect on the market.
And one of the things I was going to ask you, Jeff, is, maybe go into this a little bit. I have this question asked all the time is, you're required to use like comparables within a certain vicinity of a general home. And I'm going to use an example. There was a townhome, or not townhome, a condominium the other day, in which it was a beautiful condominium, probably the nicest one, okay? Perfectly good comps within that condominium, within that building, that 20-story building, and yet it didn't make value, and the agent on the opposite side, on the listing side, was trying to convince us to use a different building, basically. So let us know. How do you look? Appraisals in general, you have to look within a certain vicinity, correct?
No, that's not true from a standpoint of if within a certain vicinity is where the market is. If you have a person shopping for a condominium, I don't know very many people, maybe in some of the elite buildings, that just shop in that building. They'll be shopping at 4 or 5 buildings within that market area. And so what the appraiser is really trying to do, or should be doing, is getting the comparable sales and so forth that are the best indications of value. And what you said is terms of being required to do something, that's not true necessarily, but that's what's happened from a standpoint of with the fast and cheap appraisal. The people don't have the time to really spend figuring out what's going on in the marketplace, to really look at the other buildings and what historically the differences between them have been and so forth. And so they just they've got to get the report within 24 hours, or they're going to be getting emails and calls every 45 minutes from the management company, and they just throw up their hands and they finish the job and turn it in.
And that was my next thing is part of what we're seeing right now. The fact is that everything is having to be done so fast. We have, I can tell you on our side, we have get deals in, and then everyone wants the very first thing to do is order the appraisal, get it in. How fast can you get it in within the prior to the 10 days option period, et cetera, et cetera. And so we're forcing as a lender to make these appraisers do things faster because of the general market. Multiple offers are going out there. People want to see those numbers faster. They want to get things done faster. Is that part of the reason maybe of why we're seeing that faster, cheaper methodology?
Well, I think it is, and that's part of what I alluded to earlier, that it is in a large part a lender-driven problem as far as the appraisals go. And one thing, I'm fortunate enough to have been in the business long enough that I don't have to take every job. And a lot of them we bid on through a RIMS or something like that, an online bidding thing, and it says how much and how long. And if I can't meet that time, or I don't want to meet that time, or I don't think the fee's okay, then I turn down the job. But there are a lot of people out there working that are independent, that work out of their house, and they have to get every job that comes in. And so that's one of the difficult things, that they're under a lot of pressure.
Well, and I can imagine. One of the things, as we say, is we're blessed to be in a market that is strong as it is. I've always been one of those that believe that the true value of a home is what a buyer and a seller are willing to pay.
And that is market value.
That to me is a market value associated with it. But as you were alluding to, Jeff, also is there's a lot of third parties. There's a lot of stuff going on right now with Freddie Mac and Fannie Mae and FHA and VA. And you're right. The pressures that are being put on the lenders from an accountability standpoint are absolutely tremendous.
Well, particularly when you think of the cases that are $23 billion, $17 billion, where the Justice Department is going after these banks. And the large part of what they're going after the banks for is that they had defective appraisals. And right now, Fannie Mae has said, we don't want any defective mortgages. And it's just a goal that's not attainable.
I would agree. This is a hot topic. We actually have another caller calling in right now. Carol is actually calling in. Carol, how you doing? Carl, sorry.
Hey, man. Good. No worries. I just had a quick question. So I'm a first-time home buyer, and I was wondering if the appraisal comes in low, where do I go from there? What are my options?
So you're a first-time home buyer, and if the appraisal comes in low, where do you go from there? What are some of his options?
That might be something that Cindy might want to address.
Right. Absolutely.
Hey, Carl. First of all, I hope you have a really great realtor who will help you through and make this a good experience for you, because your first time with your realtor is something that'll stunt you for life. But I think really you have 4 options, and Rob had talked about it earlier, Rob. One of the things that you can do is you can negotiate through and say, hey, let's meet in the middle, let's work on that. And if the buyer and the seller come to an agreement where everybody feels it's good, go forward with that. One of the things that you'll have to do is you'll have to pay that out of pocket, because the mortgage, and correct me on, and help me with this, Chris, the mortgage will only pay for the amount that it's appraised at. And then how does he handle that afterwards?
Well, what happens is your loan to value is determined upon either the contract price or the appraised value, whichever one's less. So if you have a contract price, let's say of $100,000, and you have an appraised value of $95,000, okay, I have to use the lesser of those two values. So in this case, I'd have to calculate my 3.5%. Let's assume it's an FHA loan, a 3.5% off my $95,000, and then that $5,000 gap that exists is then the out-of-pocket expense above and beyond what we have to calculate it on. So it's really, from a mortgage perspective, we have to use it based upon that loan to value.
And addressing it with sellers, though, they get, like, I'm married to the money, I'm getting the net, I'm going to proceed with this. But the fact is, they never were going to net that amount of money, but they think they were. The fact is, when an appraisal comes in, typically that's probably what the most they're going to get in an open market is that amount, especially when it's FHA, as Jeff was talking about.
Stays down for 6 months.
It's that appraisal sticks with that house for 6 months on that appraisal. So it'd be incumbent on the seller to go ahead and take that deal, because that's the most they're going to get for that house.
I have a question based on what our caller was talking about. Is it ever in that situation? Is it ever in the owner of the house's, or I guess either way, one purchases it? Is it in their interest to hire or pay for another appraisal?
I wouldn't. One of the things is I can tell you from a lender perspective, and this is good for Carl to know as well, is once we order an appraisal, Okay, we get that appraisal back. I can't just turn around and say, hey, we got to get another appraisal because we don't like this one.
Right.
It's not part, as Jeff said, number one is anything that happens, number one, has to be noted on the appraisal to begin with. But also, there would have to be a really good reason. I mean, it's something that would be out of the ordinary for us to be able to request a second appraisal within a certain time frame and then be able to use those numbers just because we didn't like it. So a lot of times you have to go through the formal mechanism. I mean, we don't use an AMC like Jeff was saying. We have an internal company that we manage that process through. But even with them, I mean, we have to follow the rules associated with Dodd-Frank and the appraisal management rules and et cetera, et cetera. And you can't just order a new one because you didn't like something that was coming in. You still have to follow the rules and mechanisms available to you on those type of things.
Carl, I think also if you really love that house and it's a house that you want to be in for a while, sometimes the value will catch up with the house. And if you feel like that this is a good purchase for yourself, maybe don't let that stop you. Make sure that you work with your realtor, and your realtor will provide you with a comparable market analysis of the solds that have gone on in that area. And make sure you work really, really closely with that realtor. Be real honest and say, hey, I feel uncomfortable about this, or hey, I want this house. And trust her opinion, because more than likely she has a very good pulse on the market.
I would absolutely agree right there. And I know this also, Carl, is, one of the things, we see appraisals sometimes that are way off. They're 20% off, and we see other appraisals that are, 5% off. As Jeff was alluding to, on average, we've been having a growth here in the market, 1% on a monthly basis or 3% annualized, et cetera, et cetera. So a lot of times you take that into consideration, knowing where we're sort of growing, where things are going. Sometimes you have to negotiate, and you're within a 2 or 3% difference right there. You can generally, and again, I'm not an agent, so I don't want to misspeak on this, but you can generally make that up in a pretty fast basis due to the fact that the market's increasing quite a bit.
Okay.
All righty, Carl. Did that answer some of your questions?
That did perfectly.
Thanks a lot. We appreciate you calling as usual.
Hey, thanks, guys.
Thank you. And those are all really good questions out there. I mean, one of the things that we're seeing is that, everyone's out there, again, buying and selling, and a lot of good questions. But you know what else is coming up right now?
A break.
Another break as usual. So, we're going to take a break right now, but we are talking appraisals. Call us up at 800-808-5548. Stay tuned. We'll be right back.
Pearly white, just a jackknife, has old Maggie Heath, babe, and it keeps it out of sight.